but that we will have to wait until another time. But the whole idea is basically to give some insights into our portfolio companies, and doing, by the way of sort of doing them, meeting up with people from the companies. Some of the companies in our portfolio have now gone public. So our largest holding, BlaBlaCar, is now not present for first time for a while in our capital markets day or week, and that's because they're public, and so it's easier to get access to information to them through their sort of disclosures from the New York Stock Exchange where they're listed. But so they're not going to be around, but others will be. So I think I'm looking forward to this a lot. So it's 3 o'clock every day. Now it's 3 o'clock. It's Monday. We have it's today's BlaBlaCar. I'll come back to that soon. Tomorrow, Tuesday's Voy, and then Wednesday we go to Egypt for Swivel, and Thursday it's Get, who's especially exciting in this point of time. And we finish off with Booksy. And Booksy, I don't think any one of you have met, or most of you have met at least, because they have never been present at one of our capital markets days. So that would be great. That's on Friday. You know, the format of this is that you put in your questions. We'd like you to have questions, and you can put them into the chat function, and Björn and I will pick some up, and we will read them out, and if there are many, we will choose. And to encourage you to post questions, we have some giveaways. It's really cold here in Stockholm. It's -7 today, and snow is sort of coming. So we're wearing this. Björn has one too. But anyway, we're gonna the questions we read out will send you this, but maybe also these. These are BlaBlaCar socks. So that's especially relevant as we go into today's meeting. So for BlaBlaCar, we have Pierre-Antoine Bertré with us. Nico, who you've met many times before, he had a family emergency. It was very urgent, but not dramatic. So you don't have to be very worried. I think it's going to be fine, but they had to go to the doctor. So we wish him good luck. But the sort of side effect, which is good for that, is that you get to meet someone else from BlaBlaCar. And there's a lot of good people, and especially Pierre-Antoine. Pierre-Antoine heads up strategy at BlaBla. So he participates in all our board meetings. And so I've seen him, and I know he's going to present the company really good. And he's been with the company for like 1.5 years, and he joined from Booking.com, where he was head of M&A. So really cool background. And so with that, I think we'll just kick off, and I hand over to you, Pierre-Antoine.
Perfect. Thank you very much, Per, and nice to meet you all, although I cannot see you. So as I said first, I'm apologizing again on behalf of Nico, who couldn't make it. And what I intend to do right now is to share my screen and to take you through basically a company presentation, which might last 30-40 minutes, more or less, and then we can take questions. Do you see my screen right now?
Yes.
Perfect. So what I intend to do is to take you through basically 5 even sections about who we are, what is the market opportunity for BlaBlaCar, why we believe we have the competitive advantages to win, and then a few things about what's coming and the key metrics of BlaBlaCar. So I believe you already know a bit the company, so I might try to go a little bit fast, but something that is very important to start with is basically why we exist, our raison d'être, as we say. And I mean, you all know that the climate crisis situation that we are in. And to give you a bit more context about the numbers, but about 25% of CO2 emissions globally come from transportation, and mostly half of it basically from road passenger transportation. And one of the few solutions that we might have hand, except basically limiting the transportation, would be to share people's seats in people's cars. You might not realize this, but when it comes to long distance trips, usually more than 100 kilometers, let's say from 100 to 1,000 kilometers, 75% of the trips are not done by buses or by trains, they're done by cars. This is by far the biggest means of transport is people's cars globally. And I think the average occupancy of cars globally is about 1.5, meaning that there are always something like 3 seats which are empty in people's cars. What we tend to do at BlaBlaCar is to fill up those seats so that we reduce CO2 emissions and traffic as well. Given that raison d'être, our vision as written here is to bring freedom, fairness, and fraternity to travel. And our company motto being, as I said earlier, 0 empty seats, which is, by the way, is even for me, the main reason why I joined BlaBlaCar was that I wanted to work for a company that tends to reduce CO2 emissions while remaining close to travel, because this was my background at Booking.com. And I don't know many companies in travel that can boast or brag about being able to reduce CO2 emissions. And BlaBlaCar is definitely one of them, or even potentially the only one. A bit more background about what we are doing, especially the core business, which was started about 10 years ago by the 3 founders of the company, which is carpooling. And the way it works is the following. It's only C2C. So we've got drivers who are people like you and me, not professional drivers, and passengers who want to go from A to B. And the idea is that a driver has a lot of costs in driving, the cost of motoring, which is the idea of owning, the cost of owning a car, the insurance, but obviously as well, oil and tolls as well. And if you take the example that you currently see on the slide, a driver might need to pay, let's say, 80 euros to go from A to B to do, let's say, 500 kilometers. And if this driver is able to fill up his cars with passengers who also want to go from A to B, then the driver can share costs and ultimately, let's say, pay 20 euros as opposed to 80 euros, which is a big saving for a driver. And passengers would pay a cheap price, much cheaper usually than buses and trains, let's say 20 euros per seat. And the business model of BlaBlaCar would be to add up a fee on top of this, usually something like 20%. We even have 26% currently in France in our core market where we started, which is the fee that adds up to the revenues of the company. Again, this is something that is very unique. I believe we are the only company doing that at scale, with a decent scale globally. Most companies working, say, attacking the ground transport market would be about aggregating buses and trains, but the idea of connecting people's seats in cars is something that is really unique, and that is the starting from where the company started from about 10 years ago. Now, where we want to go in terms of vision. And maybe to start from, I'll use an analogy which we like to use, which makes a lot of sense for us, which is Airbnb. Airbnb started from a C2C space, which was the idea of allowing people, allowing hosts, to share and to rent their flats in a C2C fashion, and to create the trust that is needed for travelers to stay in other people's flats. This was where they started from, which was something that was really, really unique for them. And now they are expanding to other adjacent products, adjacent use cases for customers, which are complementary. And obviously, one of them is hotels. One of them is attractions, as you probably know. And even when I was listening to Brian Chesky, the CEO of Airbnb, pre-COVID, he was talking a lot about adding flights to his current use cases in his platform. And Booking.com, which I know a lot because I used to work for them, they do the same thing. They started with hotels, and then they're expanding to flights. By the way, you might have heard, like 10 days ago or something, they bought eTravelI, a Swedish company as well, which is a flight OTA, online travel agency. Again, same idea, expanding to other complementary types of products to increase the number of customers and to increase the share of wallets. And we are doing the same thing with BlaBlaCar. That's our vision. We start from long distance drivers as the supply, and then to aim to expand to more common, more commoditized types of supplies, such as bus operators, train operators, and also commuters, which is again carpooling, but for short distance trips. I won't talk too much about commuters today because it's quite new to us, but we have a special app dedicated to it, which is called BlaBlaCar Daily. But I think I'm going to focus more on bus operators and train operators. The idea would be to aggregate such supply in the key countries for us. And especially in emerging markets, by the way, I will come to that in a minute. But in emerging markets, you have massive bus markets, very fragmented on the supply base, hundreds, sometimes even thousands of bus operators. So the need for an online intermediary, an online OTA, middleman, is very useful for customers because that allows customers to basically screen all the options, check all the prices, and to book in one go in the app. And this is what we're trying to do. Again, always having the differentiating factor of carpooling, because carpooling is something that is very unique, and that we are the only company to do that. So this is on the supply side, basically to be able to aggregate all that and to show all that to customers and allow them to book. You need to have a quite significant proprietary technology. We have internally, I believe, a bit more than 300 people looking at R&D, mostly engineers and product managers, which is quite significant, which creates a massive barrier to entry, because replicating, especially the carpool business, is something that cannot be done in a few years. And then when you have that technology, you can show this and display this for customers and allow for what we call multimodality and intermodality. Multimodality is simply the idea of being able to choose between a carpool, a bus, or a train to go from A to B. You can see all the options and you can choose what you prefer. And what we call intermodality, which is our internal jargon, is the idea of combining the two. I can give you one example. A few weeks earlier, I went from Paris to the south of France in a small village with some friends. And we first booked a train on the main operator website, which is the SNCF. And then we took a BlaBlaCar. But if you can combine everything in one ticket on BlaBlaCar, which is what we are trying to do, then it creates a massive, let's say, a unique value prop for customers, because you can go from anywhere to anywhere by combining a train plus a carpool or a carpool plus a bus, etc., which is something that no other companies can do. Moving on, so I told you where we want to go. I can tell you now where we are today. By the way, I don't know if you see in my screen. I also see myself and Per and Bjorn. If you see that, I'll try to move it on so that you can see the slides a bit better. But anyway, where we are today, we have about 10 million searches being done every week globally. Those searches can be done not only for train stations and bus stations, but pretty much everywhere. We have a bit more than 1 million pickup locations and drop-off locations, which is also something that is really unique to BlaBlaCar, because a car can go anywhere. It doesn't have to pick people up at a bus station or a train station. And today we are what we call multimodal, meaning that we have more than carpool as a supply in 6 countries. The main ones being France, Germany, Russia, Ukraine, and Brazil, and also Poland. That's 6 in total. And we did that via M&A in 2019. In 2019, we acquired 2 companies. One was WeBus, which was a bus operator owned by the SNCF, the French National Railway Company. And we also acquired, and I want to say even more importantly, we acquired Bus4, which was basically the booking.com of buses in Russia and Ukraine, the leading OTA, as we call them, online travel agency, which allows passengers to go through hundreds of bus operators and bus options to be able to travel and to book a bus ticket. So I mentioned 2 examples of M&As, but we always have this debate when we want to expand to other products, if we want to do that organically or through M&A. But at least the 2 examples that I showed you were via M&A. I think last thing regarding who we are and our global footprint, in terms of active users, by active I mean a driver that indeed published a trip in a given year, or a passenger that booked a trip on BlaBlaCar. we had 23 million active users in 2019, pre-COVID, in 22 continents, and the main regions, as you can see on the slide, are Western Europe, Russia, Brazil, Mexico, India, and Turkey. Last thing that I think is quite important as well, I already touched upon the CO2 emissions, but we had an external audit company try to estimate what is the amount of CO2 emissions that we tend to avoid, thanks to having BlaBlaCar and the carpool business. And it amounted to 1.6 million tons per CO2 avoided per year, which is very significant. That's what you see on the left-hand side of the slide. On the right-hand side, that is something that is a bit maybe vague to you if you haven't used the product, what we call human connections. But if you have used the product, you would know what I'm talking about. People who publish trips as a driver, or passengers who are willing to jump on other people's cars to travel, are people that are happy to share and to exchange with strangers, really, or at least people that are vetted and curated on our platform, but they're people that they don't know. And that tends to create which truly are unique human connections. And we have done a survey that proves that a few years ago, and you can see some numbers on the slide. But we also have quite famous stories of people who met in a BlaBlaCar and that ended up being married at the result of it. And that is something that is quite, again, unique and that we are proud of as well. So two things: we save CO2 emissions factually, and we create human connections in a world where when you travel, you don't really do that. I mean, if you take a flight, you don't really talk so much with your neighbors in a flight. It's very, very different if you do BlaBlaCar. It's about sharing, and we are proud of that. So this was who we are. When it comes to the market opportunity, I think I only have 2 slides about this. The first one, which I already shared a little bit earlier, a few numbers on, but most trips which are long distance, which is a sweet spot for us, again, let's say more than 100 kilometers, are done by cars, not by trains and buses. And obviously, few people still use carpool today. So the sort of market potential for us is really massive. I'm not saying it's easy to do to entice customers and passengers and drivers to share a trip together, but the market potential is very, very massive when it comes to the carpool. And when it comes to buses and trains, it's obviously a very large total addressable market, about 240 billion euros as estimated. And that's what's quite unique to, or at least very important to highlight, is the fact that, especially when it comes to buses in emerging markets, it's very important for us, those markets are very not digitized. About only 15%, 15, of tickets in those countries are, so I'm talking about Russia, India, Mexico, Brazil, key markets for us. In all those markets, the vast majority of tickets are purchased offline in the bus station. People are queuing up to be able to buy their bus ticket. And this, of course, is changing because it's more convenient as customers to be able to book online via a one-click payment in an app. And this opportunity is not very tackled by many companies. I mean, if you think of inner city business, I mean, you'll meet, I think, Voy tomorrow, if I recall what Per told. There are quite a few companies in the inner city business. When it comes to long distance trips, there are not so many global cash-rich players who are trying to address that customer use case. We are one of the few who are doing this. And the market opportunity is really massive because, again, today, most of the tickets are still sold offline, and this is changing. One slide regarding how we compare to other quite famous digital transport players. I'm not saying that those are the main competitors, but I think you probably have those names in mind, so it's good to compare how different they are versus us. The first criteria, obviously, which is the fact that we have a carpool solution, which no other players has. This is our main differentiating factor. Second is the fact that we focus on long distance, which is not what Uber is doing. Again, some people tend to believe that we are quite close to Uber, but Uber is mostly focused on short distance, which we are not addressing, or at least to a really small extent. And second, a lot of Uber drivers are professional drivers. That's what they do for a living. And this is not what we have on our platform. Our platform is purely C2C, in the same fashion as Airbnb. At least when Airbnb started, it was only C2C and not really B2C. Third aspect, which is very important, is the fact that we are a marketplace, meaning that we have gross margin, which hosted at around 75–80% in the majority of our businesses, carpool and bus marketplace, whereas companies a la Flixbus, and we know that because we operate also a bus company in Western Europe, in France and Germany, it's not 80% gross margin, it is much lower than that, because you have to contract with bus operators and you are basically renting space in people's buses and you have to sell them out to customers, which is a lot more contract heavy and harder to do. Whereas what we mostly focus on is the carpool and bus marketplace business, which is very scalable because the gross margin is about 75–80% gross margin, as I said earlier. Fourth point, low reliance on paid traffic, something that is very unique as well. As I said, I used to work for Booking.com, and I know I really love this brand. Although I cannot share the numbers, the vast majority, a big number of their traffic comes from advertising. They have to pay to acquire traffic, although they've got a famous brand. Whereas for us, about 90% of our traffic is for free, simply because two reasons. One, if you want a carpool, there's only BlaBlaCar, so you know where you have to go. You cannot ask Google where to go. You know where you have to go. And second, because we've got a famous brand which we invest a lot in, I should say, and that's also why the vast majority of our traffic is not paid. Finally, we're well capitalized. I think the cash balance that we have today, which I can share, is 170 million euros, which allows us to be aggressive, especially when it comes to M&A. That's it for the market opportunity. I'll continue. Why we will win. There are a few, I think, quite inherent competitive advantages of BlaBlaCar, and I'll touch upon a few of them. One, which I already touched upon, is the idea that we have a unique supply. Again, if you want to book BlaBlaCar, you have to go to BlaBlaCar. You cannot book a carpool in other marketplaces, and that is something that is going to be a main strength for the years to come as well, because it's very hard to replicate. That's what I mentioned in the number 2. There are massive barriers to entry. You don't replicate something like that BlaBlaCar in just a couple of years. And third point, we've got a really high global NPS, which I'm also proud of, meaning that our customers who are passengers and drivers love using BlaBlaCar, and that also creates a virtuous circle because they don't come through us via ads, as I mentioned earlier, and also because their cohorts in terms of retention are also very good, and this is going to come in the next slide. This is what you see here. So we compare our retention cohorts for the supply side of the marketplace, which are carpool drivers, and the demand side of the marketplace, which are carpool passengers in this particular case. And we compare that with Airbnb hosts, which is the supply, and Airbnb travelers, which is the demand. And so actually the cohorts of Airbnb are public. You can see them on their IPO filing. And you can compare that with our own cohorts dynamics when it comes to GMV retention. And you can see that for both supply and demand, we tend to have cohort behaviors which are even better than that of Airbnb, which is again something that we are proud of. Finally, it's on a very high level. We've got a few macro trends that won't disappear tomorrow, and that will be significant tailwinds for us in the future in our growth development. One of them, again, is the climate crisis, obviously. Second one is the idea of basically the the advent of the shared economy, as we call it, which Airbnb spearheaded, that we also surfing on today. And finally, again, a massive opportunity of the shift from offline booking to online booking for the intercity bus and train markets, but also mainly bus markets in emerging countries. So that was why we will win. And now what's coming, a few things about that. This slide is only focused on carpool. And I didn't really mention that earlier, but most of our carpool packs are basically the number of seats that we sell, the seats we sell. Most of them are not monetized yet, meaning that a driver says it's going to be 20 euros or whatever currency per seat, and we show the 20 euros per passengers, and we don't take a fee. We only take a fee in Western Europe, which are our most mature markets, especially France and Spain. And we started taking fees a few months ago in Russia, which is a massive market for us. But in most of the countries, we are currently not monetized. And this is by choice, and it's not an easy choice to make, because obviously if you monetize, you make more revenues. But if you monetize too early, you might stall the growth of your marketplace. So we always have this internal debate at BlaBlaCar whether or not we should start monetizing more countries. And it's hard to say no, but we so far tried to say no to a lot of countries which are big for us, like Brazil, like India, like Mexico, because we want to nurture first the supply and demand on those countries before we start adding a fee, which creates frictions, obviously, for customers. And we want to add that friction only when people are used to the product, and that we know that they won't go away, basically. And again, it's a difficult dilemma to have, but pre-COVID numbers, which you see on the screen, it was about 31% of our seats were sold without, only 31% was sold with a fee, and the rest, so 69%, were sold without a fee, so without any monetization on our end. And what's key to have in mind is that we have the costs already in the countries where we don't monetize. We spend on marketing, we have local teams usually, and then we have exactly zero revenues by choice. But when you push the button of monetization, when you basically ask customers to pay a fee online when they book or on the app when they book, you've got automatically a massive EBITDA uplift, because from overnight you start having revenues and the costs are pretty much the same. You add some costs like payment costs, which are quite minor compared to the cost of the teams and the cost of marketing, which we already had. So when we start monetizing, it obviously has a massive impact in our profitability. And the last thing that I can say here is that by 2023, 2024, although it's not super precise in terms of timing yet, we aim to monetize all the countries that where we are in today, at least the 22 countries that I mentioned earlier. Again, big countries for us which are unmonetized would be Brazil, would be Ukraine, India, Mexico. And when we start monetizing those countries, probably 2023 or even earlier than that for some of them, it has a significant impact on our profitability. This was only carpool specific. Now, if we talk about adding other suppliers to our platform, again, as I said earlier, the main game changers for us would be buses in emerging markets. And we did that with Bus4, the acquisition in 2019 in Ukraine, Russia, and Poland. Now we are entering organically the Brazilian market, where again, it has all the ingredients of a great market for us, because in Brazil, our carpool product is doing really well, first. Second, there are no train networks in Brazil, if you don't know, meaning that the bus market is massive in terms of size. It's about more or less 5 billion euros of GMV per year, although the estimates vary depending on who you ask, but it's basically a very massive market size. is very fragmented on the supply side, meaning that there are hundreds of bus operators in Brazil, and there are no OTA, which basically has the winner-take-all type of effect. There are no OTA that is by far leading the country. There are quite a few players which are usually quite undercapitalized, not global, only local players. And we believe we can either win organically or basically go through the M&A route as well. And Brazil is one of the countries where we are thinking about that option. That's for buses. And for trains, which I didn't talk so much about earlier. Trains, at least in terms of the short term, are very relevant for us in Western Europe. In Western Europe, the train networks are really well organized and very developed. A lot of people use trains to go from A to B for long distance trips. So we know that this is where Western Europe, it would be very relevant to add train supply to our platform. We already have a plan to do that in 3 countries, in France, Germany, and Spain. The main one will be France, which is our historical market, where the BlaBlaCar brand is very famous, and a lot of people use our app for carpooling purposes. And in those countries, although it's not so easy in the sense that in those countries there are only one usually train operator. So it's SNCF in France, it's Renfe in Spain, it's a Deutsche Bahn in Germany. So it's hard to be very relevant as an OTA, and some companies like Trainline probably suffer from that trend as well. Whereas, as I said earlier, in emerging markets, there are hundreds or even thousands sometimes of bus operators. So it's a lot easier to be relevant as an intermediary. But we believe that if we have carpool plus buses plus trains in France and Germany and Spain, so if basically you have the same thing which Deutsche Bahn, Renfe, and SNCF has, plus on top of this you've got buses and carpools which are bookable in one go, then you have a massive competitive advantage, and then you should be able to grab a lot of market share versus historical train companies. So that's trains, and for carpool drivers, again, this is more the bread and butter of what we do, and the idea is to continue investing in this business, and again, launch the monetization phase in a lot of key geographies for us. Last thing that I'd like to mention about what's coming, there is something that is not necessarily obvious if you don't know carpool so much, but trains and buses are very relevant when it comes to big city to big city, because you've got networks of buses and trains, and they are usually quite fast, especially in high-speed trains. They are sometimes quite cheap, especially buses. If you book a Flixbus, if you book a BlaBlaCar, buses, it's usually quite cheap, but it's only downtown to downtown. Whereas the beauty of carpooling is that it's very, very granular. It's most of our trips are from suburbs to suburbs, or from suburbs to downtown, or from a village to a downtown. Those are trips where you don't have any alternative as a customer. You cannot take a bus, you cannot take a train, or you first have to go somewhere with your car and then you can take the bus. You have to go somewhere with the car, then take a train, and then finish with a taxi, for example. Is very complicated. Whereas what we can do by combining trains, buses with carpool is to be able to do to serve any A to B type of axes, because you can start your trip with a carpool and then take a train or bus. You can start with a train or bus and then finish with a carpool. And the idea of having very complementary types of supplies, buses and trains, mostly for big axes from downtown to downtown of big cities, and then carpool being handled granularity being handled by carpool, something that is very powerful for users, which we call internally intermodality, which is a tech engine that we haven't developed yet. We are only starting doing this, but when we have this at scale, basically it's going to be very hard for other competitors in transport to have a better value proposition for customers. I believe it's going to be quite hard to challenge us when this is finalized. This is a bit more about what we call the playbook, although the orders is not necessarily exactly as mentioned here, but the way we think about it is first, we launch Carpool organically and grow the usage, so grow the supply, drivers, and the demand passengers. Then we can add bus supply and train supply where relevant organically or through M&A. Then we can monetize the Carpool product, as I said, by adding a fee to customers, paid by customers. Then we accelerate the offline to online bus sales. As I said, most bus tickets are sold offline today worldwide, really, but especially in emerging markets. And then when you can add basically trains and buses and Carpool and have that in a one-stop shop, you basically create synergies in terms of marketing, in terms of customer acquisition, in terms of you increase the share of wallet, etc. You have also a stronger brand that is very recognized for long distance ground transport, and this is where you start your network effects and you start basically becoming the winner that takes it all. That was a bit about what's coming. Now a few words about metrics, mostly business metrics. Something that is quite key to have in mind as well is, although BlaBlaCar started as a French company and therefore, and later on as a European company, if you look at the yearly unique active users in 2015, they were only in Europe, a little bit I think it was Turkey, which is considered as Asia here. And then 4 years later, in 2019, so pre-COVID, the majority was not in Western Europe anymore. It was in Eastern Europe and Asia, and then LATAM as well, mostly in Brazil. And then you've got a factor of a bit more than 3 from 2015 to 2019. So today, in terms of usage, by usage is people who are actually booking trips on our platform, about 75 to 80% of that is not in Western Europe anymore. So although people might not know this, we are becoming more and more an emerging markets type of company, where basically competition is not as fierce as in Western Europe, and where the potential to grow is a lot higher as well. And I think I have 2 more slides, a bit more COVID related, as you would probably expect. Maybe to start with, when you think of COVID and transportation, those don't make for a great wedding, as you can imagine. So we were hit by the COVID wave, especially when it comes to when there are lockdowns. Basically, by definition, our revenues go to 0 because there are no trips being purchased on the platform and we don't make any revenues. But especially since the summer of this year, we do see a significant recovery. And you can see that on the graph. So what you can look at here is the share of seats that we sell or packs that we sell, which are monetized versus 19. So 2021 versus 19. And basically since May, we are selling more seats monetized versus 19 pre-COVID, which is obviously great news for us. Second, something key to have in mind is that by definition, by nature, we've got very high operating leverage because the gross margin of most of our segments is about 75 to 80% market gross margin, which means that when we scale, we basically absorb quite quickly our fixed costs, which are mostly salaries. When it comes to revenues, we don't disclose our revenues absolute numbers, but what I can say is just looking at the last 3 months, so August, September, October 2021 is already 14% higher than 2019 yearly revenues, and basically every month is better than the previous one. Basically, I can even say that October was a record month for us when it comes to gross margin as well. So it's finally getting better, even a lot better, I should say. That said, there's no new variant that we talk about since a few days. Projecting the future is very hard. It's very hard to do. What I can say though is COVID for us is a risk. It is obviously also an opportunity, especially when it comes to M&A, really, because when you have other players which are less capitalized than us, then they become targets. And we have a strong cash balance. I mentioned earlier, 170 million euros currently in the bank, and we don't want to sit on it for forever. So the idea is to smartly use it for M&A where relevant. And again, in that context, COVID is actually a good moment to go shopping. Let me put it like this. I think this is the last slide, or maybe two last slides. It's a bit more, let's say, qualitative, but I think it's very relevant for you to have this in mind. When you think of COVID, it massively impacted companies with strong fixed costs in the transport businesses. Obviously, airlines, they've got obviously planes, train operators, bus operators, because they've got fixed assets and because they have to redeploy their supply whenever demand comes back. And it's very hard to redeploy supply in the right manner when demand is unpredictable. But we actually don't have to do that at BlaBlaCar, because when a wave, let's say a COVID wave happens, we don't, in a way, if I may put it like this, we don't do anything because we don't control the supply. The supply is mostly C2C, or even when it's B2B in Russia or Brazil or Ukraine. We work with bus operators, but we don't bear any risks. So they have to renegotiate the contracts with the bus operators. They have to redesign the lines. They have to redesign the prices, which are very difficult to do. We don't have to do anything here. We are just aggregating the supply, aggregating the demand, and when the two meet, then we can take a fee. So it's a very capital efficient, very agile, and very self-adapting model, and that is a strong strength financially speaking. And finally, I'll mention 4 supporting trends that will help us in the future that are in some way or another, let's say, impacted by COVID. One is the idea that travel will be probably more and more local and domestic. And again, I used to work for Booking.com, and a big chunk of the GMV of Booking.com is for international trips, which are quite hard to recover. And again, I mean, you probably heard that a few countries are shutting down their borders again. This is not good for companies that depend on international travel, but we don't, because most of the trips that we deliver are actually domestic trips, which are a lot less impacted by COVID, and also which might become more and more important in the future as people might travel less far for CO2 reasons or for energy reasons. That's one. Second, we are not dependent on business travel. If you think of hotels, again, companies like Airbnb or Booking.com, that depend a lot more on business travels as opposed to leisure travels, whereas we are definitely a leisure brand, so we don't suffer from that trend. Third, affordability and cost saving, which might become more important as time goes by, and this is also where we play a big role, because we help basically drivers and bus operators share costs and reduce their costs, and we offer mostly price-sensitive customers with lots of options, which are again a significant tailwind for us as well in the future. And finally, I already mentioned that, but the idea of being of operating CO2 saving travel network is a key asset for us, for customers, but also when governments try to draft laws that favor carpooling. And I'll leave you with that slide, which is sort of a vanity metric, if I may put it like this, but we are proud of it because it looks so good. This is the number of members that we have on the platforms, people who signed up as drivers or as passengers. So not all of them are active, because I told you earlier that 20 million were active in 19, but you see that the number of people who actually signed up, our members, it reached over 100 million this year, obviously a massive number. And as you can see, it's not declining at all as time goes by. So I don't know if how I did it on time or not. But,
you did well. Antoine,
awesome.
Thank you so much. And to remind everyone to do questions, there's today's giveaway, BlaBlaCar socks, and this cap here. This is from VNV Global. So we go for some Q&A, and everyone who does questions will get these things.
Yeah, and if you have a question, type them into the chat, and we'll read them out later on. But to start, I thought one of my own questions. Be curious if you could provide some additional color on the dynamics in the COVID recovery you've seen over the many months now. I guess across different dimensions. So one is, demand versus supply on the carpooling side. And then also if there's similarities or differences between the emerging markets and the more developed markets in the geographical portfolio. And then last one, essentially between carpool and bus. So, what's the similarities, what's the differences? Is there anything that sticks out?
Sure, makes sense. So there are, in a way, three questions in one. It's a complicated topic. I'll try to be succinct. But basically, when you think of carpool, and this is again the beauty of the model, carpool as a C2C segment, it depends on collective intelligence, basically. When drivers want to go or need to go from A to B, they can publish a trip on the BlaBlaCar platform, and if we've got demand, then demand and supply can meet, and we take a fee. But it's very key to keep in mind that here we don't do anything as opposed to, we simply try to attract supply and demand, but we don't do anything to design the trips, to design the prices even, because most prices are just set by the drivers. And this is very powerful because in a world of unpredictable demand, it's a key strength for us because it's a lot easier to operate that model. And if you think of carpool versus buses in a COVID world, although it really depends on countries, but in a lot of countries, bus operators and train operators basically shut down for months or reduce significantly their network. And then, surprisingly enough, a lot of, actually, in a few countries, our number of users increased during COVID simply because a lot of people needed to go from A to B, but there were no other options. There were no train operators. There were no bus operators because they were reducing the network to save some costs. But then they were able to see some people still driving in their own car. And I also recall that in countries like India or Ukraine, a lot of traditional bus and train operators basically shut down or reduced significantly their network, and therefore more people booked or looked at least for trips on BlaBlaCar, for carpool trips, even more than the year before, which was pre-COVID. So in a way, that's a bit answers your question regarding carpool versus the rest. Carpool is a lot more agile, and carpool fills the gap also when you don't have other options for buses and trains. And then the last segment that you mentioned, or the last angle, would be developed world versus emerging markets. It's not easy to answer because there's no such thing as one developed world and one emerging markets. It very depends per country. But in general terms, I think it's fair to say that in the developed world, especially in Western Europe, the measures prompted by the governments were a lot more drastic than in a lot of emerging markets, which negatively affected our business, both carpool and bus operators, more than in emerging markets, basically, where there were fewer restrictions. I think that in general terms, that's for sure, although it does depend on country.
Great. So there's some questions now from the audience, and one is, first one would be, what are the hurdles to onboard train services to the platform? Are providers like SNCF and Deutsche Bahn open to work with you? And how do you handle delay issues between the transportation systems?
Good question. So on the first question, you might think that it's quite hard to convince those players to be distributed by you, by basically you being a BlaBlaCar or Trainline or other companies, or Omio, for example. But at least in France that I know, and it's probably the same in Germany and Spain because it might come from European law, but they have to accept. They cannot say no, basically. They have to accept competition for the distribution part. So from that perspective, it's very easy. You ask them and you can do it. And basically, they've got an API which we can look at, which we plan to integrate soon. Although it might take some time to integrate it, it's not done in 2 weeks. For example, Trainline being a UK company, you can book a train ticket in France through Trainline. Although you might think that SNCF might have said no, but they cannot say no. So that's that perspective, that's easy. And then the second question is, how do you handle delays? So today, as I mentioned, we don't allow customers to book a train ticket on the platform. It's something that we want to do actually starting next year in 2022. But so far, I don't know how we handle delays because we don't do it currently. What I can say though is that I'm a user of Trainline, even in France. I don't use SNCF, I use Trainline. And when there's a delay, then Trainline is doing the customer service and Trainline is contacting me. And I only go through Trainline and I never go through SNCF. So I can say that SNCF is able to share all the delay information via the API, and then the distributors, so again, such as Trainline, for example, or BlaBlaCar next year, have this information, are able to inform customers about potential delays and to refund them if needed.
Great. And as a follow-up to that, on that, especially, I guess, intermodal offering, when do you expect that to be able to be rolled out, and what's the main obstacles before you can push that live?
It's not an easy question for me because it's a very technical question, but we are staffing a team in 2022 to start investigating that use case, the idea of combining trains and carpools, or bus and carpool in one trip, in a single ticket, in a single payment. I don't think they are basically, nothing prevents us from doing it. It's not like we have to have new information that we don't have access to today. We have everything we need to do that, but we have to create the algorithm. And how long it takes, something that nobody is able to answer today. Probably, I don't know, maybe 2 years, something like this, but even probably less than that. But again, it's just a high-level number. But what I can say, though, is that we are starting a team that looks at that from next year onwards to be able to combine that. And in a way, you might think that we are not in a hurry because no other player will do that in the near future because we are the only carpool company. And by the way, aggregating bus and trains in a single ticket doesn't make a lot of sense because train and buses have the same network. Again, as I said earlier, mostly from big city to big city. When this is super relevant when you start to add train and bus on the one hand and carpool on the other hand. And this is where you have a high complementarity. So we are not in a hurry because no other players will do that in the near future. However, we want to start soon because when we have that in place, it's going to be a massive competitive advantage compared to competition.
Thank you. So there's a few questions here on the emerging market bus opportunity, and one is just the on the general progress that BlaBla has done on the emerging market bus opportunities of the past month and what do you see there. But there's also a colleague here, a viewer, listener, who has noted an increase in new bus transportation operators in the startup phase in Brazil, especially like Busser and ClickBus. And the question is how does the growth of these new players, how do they harm BlaBlaCar's expansion plans in Brazil and potentially in other emerging markets?
Great. So first question regarding where we are today with the bus aggregation. So as I said, we acquired a company called Bus4 in 2019, which was a Russian company and operating in Russia, Ukraine, and Poland mostly. And this business is growing really well. I can tell you that, for example, I think I can share that number, but in Russia in 2021, our growth versus 19 pre-COVID is over 100% today in terms of passengers, which is obviously massive. And why is it massive? Is it only because we execute well? I don't think it's only because of that, although it's probably part of the formula. But it's mostly because the market is just a high growth market, not the bus market in general, because I don't think people are using the bus today more than in 19. They are using actually less the bus than 2019. but because the ticketing segment, that particular segment is high growth. Again, because I think in Russia, even less than 10% of the seats are bought offline. This might grow to, let's say, 50% in a few years from now. And this generates organically a significant growth opportunity if you are the best player at aggregating the supply and at sending it to customers. And so we bought the best company that was doing this in Russia in 2019. And now we are integrating that supply onto the BlaBlaCar app so that customers can see both all the bus options and the carpool options and basically choose what's relevant to their needs, what's relevant to them. And this is where we have the highest growth basically currently in our company. So that's where we are when it comes to at least Eastern Europe. In Brazil, we started, we're in early stage for Brazil, also with a lot of growth in terms of number of tickets that we sell. We managed to aggregate already in terms of supply the vast majority of the bus operators in no time, to be honest. So this is something that we are really proud of. And now what we have to do organically in Brazil is to acquire demand that is relevant for buses. We've got a lot of demand for carpool. We have to make people aware that we are also able to sell bus tickets as opposed to only carpool options. So this is where we are. Now to the second option, we are indeed seeing that a lot of players are basically addressing the Brazilian market. And first, it makes a lot of sense. It's a very big market. It's about 3 times the size of Russia. As I said, it's more or less, give or take, 5 billion euro GMV opportunity per year. So it's a massive business. I mean, I can give you one example. France, in terms of long distance bus market, it's about 250 million. We are comparing 250 million versus 5 billion. It's a massive opportunity. Second, as I said, it's firstly very fragmented on the supply side. There are many bus operators. It's mostly offline, and there are lots of competitors, but no one is by far the leading player that nobody can compete with. So that's why you see some new players coming in. You've got Boozer, the SoftBank-backed company, which is mostly an operator, a la Flixbus, but they also have a bit more of a marketplace play, but it's mostly an operator, meaning that they have to contract with bus operators and they take the risk of not being able to sell the inventory. So if they don't sell it, they have the cost of renting the seats, but they don't have the revenues. So it's a very risky business. Flixbus announced a few weeks ago, I think, that they are attacking that market as well. And what do we take? What's the takeaway for us? First, in terms of bus operators, the more they are, the better. Because if we're able to aggregate that supply, then it's even more relevant as an OTA to be able to have lots of supply, and because then you are more relevant for users. Second, will this make the competition harder? Yes, it will. But so far, there are a lot of basically big brands, but which are really small in Brazil, and Brazil is still something that needs to be won by one player. And given our carpool option that we have, which is very big in terms of number of seats that we sell, and because we already starting the bus business there, I think we are really well placed to basically lead and win that market.
Great. There's a lot of questions now, and time's running out, but I think we'll do a last one, and then we'll try to answer the ones by text later. But one interesting one here, and they're all interesting, but one you touched upon monetization, and a question came up if you see any churn in countries where you recently started monetization, and also are you considering a secondary sort of revenue stream in terms of advertising through your app?
Sure. So on the first one, do we see churn when we start monetizing? The answer is yes, and it's quite normal when people are used to using BlaBlaCar, usually for years, because as I said earlier, we don't start monetizing after years of nurturing the marketplace. So when for the first time users see that they have to pay a fee, although it's usually super small, because if it's like, let's say 10 euros for the trip, 20% of that might be 2 euros. And then they have to pay 2 euros to BlaBlaCar, which is not a big fee in terms of absolute number. But when for the first time that they see what we call the payment wall, which is that for the first time they have a window saying you have to pay now, we do see some churn. However, what we see is that users tend to come back because the reason they were using BlaBlaCar was not because they were not paying €2 more, was because it was very useful compared to other transport means, which are either buses, trains, or usually nothing at all. Because to go from A to B, usually there are no trains or buses that exactly do what you want to, where you want to go, or where you want to start your journey from. And BlaBlaCar being such a unique offer for passengers, what we see is that although the first time they see the world, some people churn, they tend to basically come back.
Great, thank you so much.
I have to say that I didn't answer the second question.
Okay, yes,
I don't want to be rude to the people who wrote it, so I can say it really quickly. But in short, no, we don't plan to add some advertising on our app because it doesn't look good, and we can do that basically.
Thank you so much. It turns out I didn't need to incentivize you with socks or caps because there's so many questions, but we'll get to the ones who weren't answered by directly live. We'll get you some answers in the text form. That's, I think we basically have to sort of end here. So Pierre-Antoine, thank you so much. Speedy recovery for Nico's family member there, and thank you everyone for listening in, and I hope you all join me, and there'll be new giveaways tomorrow. I hope you all join us tomorrow at 3 o'clock Stockholm time.